Hey guys, what's up? Happy July 4th. It is a day off. It was a day off yesterday from the market, but we can still go ahead and do the analysis for Thursday. I'm not in America, so I completely forgot about Independence Day, and I thought we had a trading day yesterday. Uh, so I planned, to trade. Um, Unfortunately, that didn't happen, but I'm still going to be looking at what happened on Thursday and making predictions based on last Thursday for the upcoming week, which is the week of July 6th. Now, here are the stock picks for this week. What's interesting to note is that we have entered a bear market for maybe a temporary time, but we can still find some good stocks to play with a bullish angle. And I'm going to show you those stocks, a few stocks for the next week that would be decent swing trades and possibly decent investments. We're going to go ahead and start with eBay. By the way, I'm going to be using three, where are we? Three free websites that allow us to look at stock charts. They are finance.yahoo.com, stockta.com, and then stockcharts.com. All right. If you want to know my setup, you can go back to previous video and look at how I set these things up. I'm not going to go into that today. We're just going to go directly and start looking at these stocks themselves. So this is eBay. Everybody knows about eBay. eBay has been a successful stock in the long term. In the past month, though, it's trended more or less sideways, and it's kind of an oscillatory stock, though it doesn't really oscillate between high values. What's interesting is that on Thursday we saw a very high volume of people buying into the stock. It could have been a news event that triggered this. We don't know, and we don't care, and we don't want to spend time researching it. We just want to look at the candlesticks and other indicators to determine what's going to happen with eBay in the future. All right, so we had a quick bearish trend that was followed with a bullish harami, where we have a green candlestick within a red candlestick, which predicts an upward movement. Then we saw this red candlestick, but look at the shadow below it. We have a shadow, a long shadow, so it looks kind of like a hammer. That's called a hammer candlestick. And what it means is that we probably are reversing a bullish trend. Now, in this case, we've confirmed both of these candlestick patterns as bullish on Thursday as moving upward, and we're probably going to continue to move upward just based on these candlesticks alone. Moving on to stockta.com, we're going to go ahead and look at the support and resistance levels as well as the Fibonacci's. So we can see that we're actually right above a support level, and we don't have any strong resistance levels above us. You can tell by the confidence level. Anything below 5 is pretty weak. So we don't really know where this stock is going to stop. The sky is the limit. It's possible it will hit one of these resistances and the resistance will kind of solidify, but we probably won't see that. I'm thinking this bullish momentum is going to continue upward. Look at the Fibonacci's. If the stock does fall, eBay is likely to move back upward and retrace its downward steps. You can see in the long term, the stock is bullish, and in the short term, the stock is bullish. I don't really know where these numbers come from. I don't trust them much, so I'm going to go to stockcharts.com, type in eBay, and look at some indicators. Here I'm looking at the slow stochastics, the Arun lines, and the accumulation distribution line. Now here's eBay. You can see that the moving averages are far apart, so this is a long-term bullish trend. I usually use that to determine whether it's bullish in the long term or not. And the Arun lines are insignificant because they're both very low. The accumulation distribution line is upward, so that implies that this upward trend is either starting or already in place. And if you notice the stochastics, we just saw the black line cross above the red line. That is a good sign for a bullish trend. Unfortunately, it crossed kind of in the middle of this area, between 20 and 80, so it's not really that strong or significant of a buy indicator. But nevertheless, when you see the black line cross over the red line, it is a hint that the trend is going to start upward. So I believe eBay is going to be a good stock pick for the following week, and it's probably going to move up for a few days until it hits a new resistance level, and that's probably the time you can consider getting out. That's eBay. We're going to move on to QCOM. QCOM also trades on NASDAQ, and generally it's not a very good stock because it's usually trending sideways. Now, what's interesting about QCOM is we saw what you'd call, well, we didn't see a real breakaway gap because the trading volume, you see the bars at the bottom, the trading volume was really high on June the 26th, but it didn't correspond to a gap. The gap followed that day of high trading volume with a day of lower trading volume, which is interesting, but not really uncommon. Sometimes this happens. It's kind of like a delayed gap. Now, what's interesting is that this candlestick gave us a gap that's outside of the trading region that we saw in the past month. In the past month, the low was 64.60, and now we moved into an area below 64. So it's probably important to look at the resistance and support levels for QCOM, but also because this volume was so low, you might think that this gap would fill. And if it fills, it will probably surpass or at least hit 64.6. So we can reap a dollar, you know. And if you are going to buy a call option, this would be a decent quick profit. You could probably get, 5 or 10% ROI if you buy a call option and wait for this gap to fill. So we're hoping this will fill, and we see that we have a bullish Harami candlestick in the past 2 days. On Thursday, we finally got a bullish trend, even though it's a small green body. It's likely that this is a bullish Harami that's going to move upward. It's going to move the stock upward, but we want to check other indicators as well. I admit this is kind of a risky play because QCOM is kind of bearish overall. But at the same time, if this does fill, we can probably move all the way up to this next resistance level, which is 66. So we're not looking to move from 63 to 64. We're looking to move from 63 to 66. And if you're playing a call option, that's a lot of money. So let's go ahead and look at some other indicators. Again, we see the black line cross over the red line, which is a buying signal. Here it means that the stock is probably oversold. Generally after a gap, that's not so trustworthy, but because it's under the 20 level and it looks like there's some significant space between the black line and the red line now, it's not like just sitting on it like we see here. You can say that this buying signal is actually somewhat confirmed, and it would be a good time to get in on the stock. Unfortunately, the rune lines tell us that it's not a good time to get in on the stock, and the accumulation distribution line is divergent with the stock, which means that this trend might not hold. But based on the stochastics, the candlestick, and the potential for gain, QCOM might be a pretty good choice for a call option. It might not be a good choice for investment. So you might not want to buy the stock, you might want to buy a call option instead. That's QCOM. A bit more risky, but you can possibly make, like if you get in on it, you will know your price target. Your price target is this next resistance level, 66.82. So as soon as you buy a call option or as soon as you buy the stock, you can set a limit order to sell automatically when the stock hits 66.82. That's what I would do in this situation. All right, we're going to move to CGRA. CGRA is a company you've probably never heard of. It's some really tiny capital investment company. And actually, we don't even need to look at StockTA.com because it's a penny stock. It's like a fraction of a penny. So you get all these weird things in StockTA.com. When you're looking at penny stocks, you generally, if you're doing technical analysis, you generally don't really want to look at the candlesticks either because of this, these tiny volumes. You see these weird candlesticks. In the most recent trend, we saw a huge buying volume on Wednesday, followed by more bullish indications. Now, what's good about these stocks is that even a slight change in the stock value moves the percentage up quite highly. So if you got in, yesterday or on Thursday morning, and got out on Thursday evening, you would have made 7%, which is really high. This is why a lot of day traders like to play these small penny stocks. Looking at the CGRA analysis for these indicators, we don't really see anything interesting here in the stochastics. But we do see the Arun lines crossing over one another. The green line is now on top and it's above 70, which is usually a pretty good buying signal. In addition, the accumulation distribution line is slightly upward, so we don't really, there's no reason to fear that the trend is not going to hold or that um, the trend is moving downward. So if you look at the candlesticks, interesting. It's very different from Yahoo, isn't it? We don't really care so much about the candlesticks here, but you can see the moving averages have crossed over one another, so the trend is probably going to be moving upward. But I really care about the Arun lines in this case. I think the Arun lines are telling us that this would be a decent stock to buy and hold for like a week for a swing trade. So I usually like to include at least one penny stock in this stock pick video so people with not a lot of money can still play and get some experience trading without putting in a lot of money like you'd need to do for eBay. Anyway, that's CGRA. Penny stock, it trades on the pink sheets. If you try to trade this and you're a new trader, your brokerage is going to say, they're going to give you a lecture about trading penny stocks before you're allowed to trade. Just say, okay, I understand. I'm willing to take the risk and just go ahead and buy it. All right, GE, General Electric. You probably know about this company. General Electric, General Electric doesn't really move that much. You can see that in the past month it's only moved like between a dollar's width of 27 bucks. What's interesting here? Nothing really. No real good candlestick patterns. Why did I choose this? Okay, so right now we're between a support and resistance level. The support level is stronger than the resistance level. You can see it's 8 as compared to 4. So really we don't need to look at this resistance level because it's so weak. We do need to look at the next resistance level because it's very strong. So it looks like we're actually between 26 and 27. Now, a stock like this that kind of oscillates between two numbers is pretty good for swing trades, especially if you're playing options because you get to like mimic buying 100 shares of stock for a really cheap price. And if it goes up to where you think it's going to go up, which is in this case could be 27.51, it will go up basically $1, and you'll make $100 for every dollar it goes up on a call option. So it's a quick $100 with an investment of usually just a couple $100. So you can get like 50% ROI, for example. Now, the Fibonacci's are strong. So it means that, well, when you see a strong Fibonacci's and you also see that you're above a strong support level, it means that you probably have multiple chances to hit this resistance and possibly break it. So these two in combination tell us that the stock is probably a good buy because we're protected by the support below it, and we're also protected by the Fibonacci's. If the stock does drop a bit, it's likely that it'll come back pretty quickly. And most importantly is the black line and red line hitting each other, the black line looking to move above the red line, and this is happening below the 20 level, which is a very strong buying signal. Now, we haven't confirmed this yet, the lines haven't crossed yet, but if we get in on this stock early, we can get more profit. So you might want to watch this for a day and see if they really do cross over one another, but you really do want to get in on the stock before the black line, or some people will say before the red line, if you're more conservative, passes 20. Right now is looking like a pretty good time to buy. Unfortunately, the Arun lines just crossed over one another. That's telling us kind of a conflicted buying signal and selling signal is present in this stock. The accumulation distribution line is somewhat upward. So, looks like the trend is starting. Now, I'm going to say this is a pretty bullish bet right here. We're pretty safe in getting in on this because of the support and Fibonacci's. And our price target is about 27.51. So what I would do here is buy the stock. After you buy it, immediately put in a sell order for this price. Alternatively, you can buy a call and then sell the call when the stock hits 27.51. Those are both good choices for GE. Quick trade, decent ROI, and well, that's it. No and. All right, so the last choice might surprise you, NBG. Why are we in this bear market right now? Well, most importantly, Greece is having some banking problems, but also China's stock market just had a mini crash. Now, my fifth and final pick is NBG, the National Bank of Greece. It's an ADR, so we're investing in Greece. We're literally using American dollars to invest in a Greek company, and that's this bank here. Now, why would you do this? Isn't the bank kind of like defaulting? Isn't it crashing? Yeah, it's crashing, but we are technical analysts and we don't bet on news events or rumors. These things are already reflected in the stock price. That's what we believe as technical traders. Now, we're going to look at this gappy stock, which is really a good stock to play. If you know me, then you know that I like to play gaps. Gaps have made me quite a bit of money. Other people like to stay out of gappy stocks, but I find that this is a good area to trade in. So I'm going to show you this gap trade. What we got is a gap between June the 16th, or June the 26th, and June the 29th. This gap is quite large in terms of percentage, not in terms of dollars. And you can see that that's the only gap besides this gap, which already filled, that is present. Now, this gap, I believe, is an area gap, and an area gap will fill. So from here, we are at 1.13. Statistically, the stock should hit again 1.26 in sometime in the future, and gaps usually will fill within 2 weeks. So just based on this gap theory alone, this should fill. And if you look at the past, all of the area gaps in NBG, Jesus, have filled. You can take a look. Here's a gap. Did it fill? Yeah, it filled. Here's another gap. Did it fill? Yes, it filled. It filled on this day. Here's another gap. Did it fill? Yeah, it filled the next day. So this stock does conform to the laws of gap theory, and we can take advantage of that. Now, just based on that alone, you can make a trade on NBG, but we want to look at other indicators. It's usually not safe just to make trades based on gaps, although if you do so, area gaps are probably your best choice for doing so. Let's go ahead and look at the other indicators. First of all, we are above a very strong support level. So despite the bank's problems, we do have technical indicators telling us that the stock is probably not going to drop below $1.1. Now, it did happen in the past, but it quickly shot back upward. So at this point, the stock was probably oversold. Investors saw that and they bought it. So they are either technical investors or they are fundamental investors who are banking, pun intended, that the bank will come back, that the bank won't default. The resistance level above us is a little strong, but still not that strong. We are looking to hit what? So we're looking to hit this exact resistance level. That's where the gap ends. And that's exactly what we want to do. We want to hit 1.28 and get out. That's our goal. So if you buy like a call option on this, you can make a decent ROI. If you put in money in the stock, you can also get a decent ROI because, well, it's a cheap stock. It's a penny stock. We have the black line crossing above the red line in the stochastics area, although it's not below 20. It's a weak buying signal, but it's a buying signal nonetheless. The moving averages look to be converging. Finally, the bullish line is moving toward the bearish, or the bearish line is moving toward the bullish line. If you looked back a few months ago, you would have seen no bearish line because it's so high up. The Arun lines are telling us that it's still a bearish stock. The accumulation distribution line is saying that the trend might be changing. You see how it's shifting upward? It's saying that we might see a reversal soon, and we're looking at what looks to be a reversal actually. So based on that, I would say this is a decent gap trade, and I wanted to include one gap trade in this stock picks video. I think this would be a very interesting gap trade, and the ROI you can expect to make, let's say we do hit 1.28, then we made 18 cents on investment of 110. So that's an ROI of 16%. That's pretty high. And that's probably going to happen within 2 weeks, or within 1 week in this case, because gaps tend to fill, area gaps tend to fill within 2 weeks. So those are the stock picks for this week. I'm going to leave them up for a second. eBay, QCOM, CGRA, GE, and NBG. If you have any questions, go ahead and send me an email or leave them in the comments below.